Hi, welcome. This is Mary Ellen McGonagle, Senior Managing Director of Equities here at Simpler Trading with your weekly Edge show. Today, we're going to take a look at some of the more impactful events and news items that drove the markets lower last week. And then from there, we are going to take a look at where we closed the week with the broader markets. And then beyond that, we want to see where relative strength may be appearing in these markets versus the relative weakness that is quite pervasive. Viewer question of the week, and it's all about ways to uncover areas that could potentially hold up in this really downward trending market. And we are going to share with you ways that you can uncover those areas. So first up, looking at the news from last week, we did see interest rates rise to their highest levels, actually beyond 3 years. After this month was the fifth month of gains in interest rates. We also saw the US dollar hit a high back to 2020, not a 20-year high, but it did pull back a bit from that high. A lot of the uptick in the US dollar is due to global growth concerns, certainly with China's lockdown, and then also that rise in interest rates is also pushing the dollar higher. We did see oil prices rise over Russian supply disruption. They are ceasing exposure or exports to certain countries, and that, of course, is increasing the price of oil. We did see several very prominent FANG stocks report their earnings this week, and the results were mixed at best, but certainly the impact was almost profound, as you'll see when we move forward here. Inflation did rise again. We saw a inflation report today, the PCE, and it was all about an increase in gas prices pushing regular inflation up. Core inflation remained stable. That was generally good news, but the markets looked the other way, as they did on positive news that consumer spending is picking up despite the really high inflation that's out there. So let's go ahead from here and see where did we close the week. And here we are with the daily price chart of the S&P 500. And you can see that we had a generally downtrending week. We had a couple of days here, Tuesday and Thursday, with rally attempts. But overall, the broader markets declined. They were down over 3% for the week. We can see this RSI continuing to trend lower below that neutral 50, so in negative territory. Likewise with the stochastics down here in negative territory as well. So we did close today here at the 4132 level for the S&P 500, and your next area of support is awfully close at this 4115 level. So you can see how close we are to potentially breaking below near-term support. I'm going to go ahead and pull up a weekly chart to emphasize that if we break below this low, we do have another level from earlier in the year. Just to emphasize that if we do break below these lows here, your next area of possible support is quite far away. So we want to see some sort of rally attempt here, of course, from the S&P 500 to support the concept that we will not decline a whole lot further. From here, let's take a look at the underlying sectors in the S&P 500. These is a daily 2-month price chart of the 11 sectors sorted by relative strength. And we can see consumer staples up here in the forefront. The group was down about 2%, but certainly less than the broader markets, holding up well. We did have a couple of bellwether names report pretty strong earnings, but overall, the trend is unfortunately similar to most other areas of the market where it has broken below these shorter term. In many cases, longer term moving averages have been broken, and then your momentum shift with this MACD black line down through the red with your RSI turning negative. And then other areas up here that by and large outperformed, energy stocks down about 1.5% on the week. We did have a big drop on Monday that then had subsequently seen a little bit of a rally in these stocks, an area that certainly I'm keeping a close eye on. My MEM Edge subscribers will know we still have several names in this group, and I will provide intel in that over the weekend. If you haven't already, go ahead and use that trial button below so you can stay on top of not just energy, but certainly the broader markets and elsewhere as well. Technology relatively outperformed also. It was down 1.2%. We had a couple of rally days. Thursday in particular was boosted by strong numbers from Microsoft, but unfortunately tech did give that away as well as other gains. We saw Qualcomm up on Thursday on super strong earnings. That's a semiconductor stock, but overall that downtrend in technology does remain in place. From here, let's go ahead and take a look at some of these underlying industry groups in the broader markets. And again, that RSI, using these ETFs, your relative outperformance. And here's a quick look at that US dollar index. I talked about the fact that it is continuing to trend higher. Quite simply, we can pull up a weekly, and this is that spike that I was talking about in 2020 at the beginning stages of that pandemic. And then from here, we can pull up an even longer term monthly chart and see that we are at very elevated levels here for the US dollar. Another area that was upticking, I mentioned the yield on that 10-year. That's what we are looking at here. And then two, this considerable uptrend that continues to take place in the face of the Fed raising interest rates. Of note is next week's meeting of the federal FOMC, Federal Open Market Committee, where it's anticipated that the Fed will raise the Fed funds rate by 0.5 percentage point in order to help stem high inflation. Also up here, moving on the upside, is volatility. This is that fear index. We did close up here at 33, and it is another area that is getting elevated, indicating investor uncertainty. And as we get higher on this volatility, usually we do see continued deterioration in the broader markets. Going back to our list of these ETFs, Brent crude held in here. It is still above that $100 per barrel, 107 to be exact. And I talked about those sanctions in Russia keeping oil prices elevated. From here, taking a look at some of these tech areas that didn't have great weeks, but on a relative basis. This is the semiconductor index, down about 2.4%. That's relative to the NASDAQ, which was down 3.8%. I talked about Qualcomm. There were a couple of other bright spots in semiconductors, but overall that group remains in a confirmed downtrend. One other area that we can take a quick look at, I don't see it listed here, but I'll go ahead and pull up the chart. It's not a good looking chart by any means, but it is another area of tech that relatively outperformed. This is the IGV software ETF. You can see it was down about 2%, all about Microsoft. So that's a view here beyond those underlying sectors. From here, I wanted to highlight an area that is seeing what I can only call relative outperformance, and that is select areas of commodity stocks. Now, I will say, generally speaking, usually commodities will decline as the dollar rises because a lot of these commodities are US dollar based. However, we are seeing areas up here that are holding in well, primarily because of the Russia-Ukrainian conflict. And here we are with corn, CORN, certainly does not look at all like the broader markets, remains in an uptrend. Ukraine, of course, a big exporter of corn as well as other grains. Natural gas still holding in well after this explosive run-up. This is all about increased and continued high demand in the face of low supply as Russia continues to reduce its output. They are a major exporter of natural gas. And we can see that UNG broke back above this 10-day simple moving average. And the group did get overbought here, the RSI up here above 70, but it remains in positive territory, which is constructive. I'd like to see a black line up through the red on the MACD. And depending on news, we could see a little more in the way of upside price action on natural gas. One last area that we can take a look at on the positive side is quite simply DBC commodity. It is the Commodity Index Tracking Fund. And we can see also in a general uptrend here with the RSI remaining up here in positive territory. And also on that grain side, wheat. Now, we did see it close the week down. If we are able to find support here at this upward trending 50-day simple moving average, and if we get any kind of MACD crossover, could be an interesting move in wheat as it relates to these commodities. I'm going to leave it at that. Everyone have a wonderful weekend. I look forward to seeing you here again next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.